Welcome back, everybody. For today, I want to talk about how we can utilize the London session. How we can take that range and we can utilize that in the New York session. In the previous video, we kind of talked about how we can utilize the Asian session to find a setup in London when price trades through the low and then comes back and retests, in a sense, the Asian range, and how we could incorporate the 50% of the Asian, and you can find a PD array and you can frame some sort of a trade setup. And we also talked about how you could use the Asian range and how price then ends up targeting the Asian range high or low, and you can use that as a target essentially. So this video is kind of going to be the first one where we got some audio going, and this is all just a quick little setup I have, but I'm kind of going to talk in this one and give you a little bit of a background as to me as a trader, and what's going on, and what you guys can expect in the future going forward with this channel, and what's coming. So at the moment, the reason why I haven't been incorporating audio in my videos is, number one, because I just didn't have a mic laying around, and it's kind of difficult because I have my whole setup. My setup is in my living room as well, and so you always have this ambient audio from TV going, or a microwave going, or a kettle going. I mean, come on, I'm just not going to incorporate that into my videos. If I do something, then it's going to be professional, it's going to be quality work. That's just me. It's going to be good. It's got to be good or you leave it. So I've kind of been working on a plan for a little while now, where I got a mic, and I got a little laptop, which I'm hoping it's going to be on par with being able to just record videos for me, because I'm basically going to use the thing just to get the videos out, and so I can take that, and it's obviously, being a laptop, it's flexible for me to move it around to wherever I need it to be, so I can have a quiet ambient space where I can focus, and I can do the videos and stuff. So hopefully it's going to be on par, and hopefully it'll be able to handle what I throw at it, because it's quite a dated machine, so but yeah, if it gets the job done, it gets the job done. So anyway, that's mainly why there hasn't been any audio in the videos, just because it's just not been an optimal environment for me to incorporate audio in the video and just have a lot of background noises and produce content, which I'm just not happy with. So anyway, this is kind of going to be like a little introduction video, and I'm going to tell you more about my story as a trader as well, and yeah, we'll just discuss what's going forward, and we're going to have a bit of a little space, and we're going to talk a little bit in this one, and towards the end of the video I'll get to the meat and potatoes, and we'll talk about that, incorporating the London range to find some setups in New York session. So me as a trader, I started about 4 years ago. It was around about 2019, I believe, where I started, and my journey began on Telegram. I came across, obviously, YouTube, and I found some trading videos on there at the time. I was running a job, and I wanted to do something more. So I kind of started looking for some ways to make money, and do stuff, and I came across trading in a way. and eventually discovered, okay, you know, Telegram at the time had a really big trading community. So I got the app and I, you know, made a profile on there, and I eventually found some groups. And back in the time, I started doing retail like anybody else would, and I started learning about trend lines and support and resistance, classic support and resistance, and we were looking at grabs, and we were looking at the RSI, and we were looking at a whole bunch of stuff, honestly, but mainly I used to trade a trend line, and I used to love the weekly chart. I used to love going on a weekly chart and I plot my trend, and I would just use that. That was my main thing. Anyway, and you know, being in a group, you know, we had a whole bunch of people, you know, like 4 or 5 people, which they were pretty good traders at the time. They were making money using, you know, retail stuff, and you know, every now and again they would post, you know, setups on there, and they would be like, okay, yeah, take this one and you can get in this one now if you want to get in this one, because we have this confluence of this crab or this whatever pattern. And yeah, I was like, wow, okay, you know, I got in and I took a bunch of trades with these guys, and you know, I didn't make my money, of course, and whatever, but in the end, you know, it was, for me, it was just not the thing. You know, I don't want to sit there and wait until somebody tells me, okay, you can go in now, you can go buy, or you can go sell this because we have this or that. I wanted to be able to go in there whenever I want to go in there, and I want to be able to know when I can sell and when I can buy. I don't want to be sitting around waiting for somebody to tell me what to do and when to do it, of course. That was my first main big thing, where I was like, okay, I want to start learning how to do this so I can do this on my own. And that's when I just started learning. I just started learning trend lines and support and resistance ideas, chart patterns. At some point I was looking at Elliott waves too. And I was like, no way, this stuff is way complicated. Elliott waves is complicated, man. That stuff is not for me. Not for me. But yeah, I was doing that for the better part of at least 7 months, and I didn't find any consistency doing that, honestly, too. It was just, you know, it was just way early on. It was lots of trial and error, and it just really got nowhere. Somewhere along the line, I came across a guy named, back in the day, we had ICT had a thing going on where he had a website, and you know, he had basically all the free YouTube stuff that's been on his channel for years now. He used to have that stuff on the website. And anyway, yeah, but I came across a guy called named Steve Morrow. I'm not sure if you guys know him or not, but if you just go on Telegram and you just type market maker cycles or models, or you can just even go and type in Steve Morrow, and the guy's basically in watered down ICT concepts. He kind of uses a thing called levels. Now, levels in a sense is you get a level 1, 2, and a level 3, and you get a reversal off of that. And how he would use entries, his entries would have been on a 15-minute time frame, and you would look for what we call a first leg and then a failed second leg, which would basically be an order block trade, to just put it plain and simple. Or we would get a second leg where the second leg would take out the first leg and then run off, which would in essence be a turtle soup setup. I'll go in and I'll go look at some of the I still got some of the files and some of the stuff on my PC, and I'll just incorporate some of the screenshots and whatever, so you guys can just get like an idea of what I'm talking about, you know. And we used to have an indicator which the guy, it's basically an RSI that's gotten oversold and overbought, and he used to have this thing where it's got this blue line on it. It has like these two blue lines, like a channel on the RSI, and then we had like a green line and a red line, and when the green line got above, if we're looking at a sell scenario, short, you would have the green line on the RSI would get out of the bands, out of the blue bands, and we would have called that the shark fin coming out of the water. That's what we called it, what he called it. And that would be like when you would start looking for a divergence on the RSI, where price might be doing a thing where we might be getting a high that ran out liquidity, and then we would have a failure to take out that high. So in essence, that would be perhaps an order block that could, you could possibly have an order block trade or just a failure swing. And then the RSI would have a divergence with price, where price would be giving us a lower high, and then the RSI would pop up a higher high in the oversold zone. That was, one of the convergences or confluences that we had. But anyway, I studied that for a couple of months, and I went through the course, and I did my back testing, took my notes, and it just never provided the results that I was looking for. I didn't find consistency with that either on. So it just did not work for me. From that, I went on trading, and kept on looking. I came across a guy, which he's not on Telegram anymore, or at least not on mine anymore, because honestly I don't sit there and look at groups all day long, and I just focus on myself. I don't care about those guys. Anyway, back in the day, he introduced me to ICT, and he was like, yo, go to the website, go look at these videos. And back in the day, the guy used to trade, he traded the fib, man. He traded the fib. He was doing every single week. He went in there and he had a 10K account, right? And he made at least like 5K on the account, like every single week. Some weeks he would come out like 8K, 7K, but it was always around there. And the guy told me, yo, like, go look at this guy's videos, you won't regret it, and go and study it. And you know what? He was trading the fib. He was trading OTE, optimal trade entry patterns, and he would trade them on daily and weekly charts, and bring it down to a 4-hour. And he would basically, in a sense, if you've gone through ICT's 2017 content on the core content, the mentorship, then he was basically a one-shot, one-kill trader, right? So in a sense, he's looking to catch the weekly range, the expansion. So that's what he did. He would like take 2 or 3 trades like that and get his weekly expansion. He'd be done and dusted. Get out of there. Now this was way before we even had funded accounts. There was no such thing as a funded account back in the day. If you wanted to start, you gotta get your own money, save it up, build it up. I mean, I remember looking in groups and stuff, and tons of people would have like $100, $200, or $500 in an account, and you would grow that up, man. You would grow it up, and if you're consistent enough, then you can take. You can honestly take any amount of money and you can grow that account. It doesn't matter how small or minute. You're just not going to be able to take that $100 into like 10K or 5K or like 1K like in a week. That's just unrealistic. It's just not real. It'll take you like months or like up to a year to like grow that account and have it into something which you can start making some decent profits and start kind of consider living off of the thing. But lots of people would do that, back in the good old days. Now we're all spoiled with all these funded accounts and all these new niches on things, which is good. It's great that, you know, there's an alternative way to get in there and be able to pay $90, and you can get a 10K account and you can start that off, and you can, you know, if you're profitable, you can grow that money and you can buy more funded accounts with that, with the profits made on that, and you can basically start growing your own capital, and you can start taking your own capital and you can look for a good broker and you can open your own account, which, you know, like ICT has said, and, you know, a whole bunch of traders too on Twitter has, you know, said the same thing, and I agree with them, that funded accounts are just tolerated to be around for now. I don't believe it's something that's gonna, you know, stick around or be here for years to come. I don't know. Maybe they might be. Who knows? You know, who knows? But, you know, they're here now, and, you know, take advantage of them while you can. Grow your capital and take that money and put it in your own accounts. Anyhow, I came across that guy, and that's basically when I had a little niche into ICT's concepts, and I kind of started glancing at his concepts and stuff. And, you know, back in the time we had order blocks. The big thing was order blocks, and I was looking at order blocks and I was kind of studying him. I was like, wow, man, this guy's stuff is confusing. It's difficult. And I kind of studied it for a little bit and kind of like clicked off and like, okay, like, you know, this stuff is way hard. I'm just going to take a step back and just, you know. So I took a step back and, you know, for a while didn't really study his stuff, but I, you know, I kind of go into the groups every now and again and be like, people are doing pretty good at this stuff too. And until eventually when I really started diving in and I started studying his concepts, and yeah, I studied order blocks, I studied the fair value gap, heck, I even studied OTE, and I looked at the market maker buy and sell models, which I still kind of, till today, I still kind of incorporate the buy and sell models. Just, you know, it's kind of like a thing in the back of my mind where I kind of apply that model when I look at any time frame or any chart, and I'm like, oh yeah, that's where the draw is. It kind of like helps me identify where's the draw and liquidity. And I don't really incorporate the OTE. I don't find myself drawing a fib on the chart and then, you know, like, oh, there's OTE. I kind of know, like, in the back of my mind when I take a trade, like, we can look at the 2022 model just as an example, and, you know, you get, you know, price takes out the sell stops, and then, you know, it rejects that, and price gives you a market structure shift, and it gives you an aggressive run and leaves a fair value gap, trades right back into that fair value gap. And if you take a fib and you pull the fib on that swing, it's, you know, that fair value gap that you want to take an entry on, that's automatically going to be at a discount, and it's going to overlap with the OTE on the fib. So I know when I take a trade and when I look at price, I can see where OTE is going to be at. I don't have to draw a fib anymore. I'm you know, I've done that. I've been there, so I can look at it and I know it. This is in a discount. OTE is right there. So I kind of know in the back of my mind when I look at those setups and when I mark them up or whatever, I know that OTE is a part of my confluence. So anyway, back in the day, order blocks used to be like the big thing. Everybody was talking about order block this and order block that, but order blocks, in all honesty, they are vague in the sense that there's tons of candles, right? So you have to look at specific context to know which order blocks are valid and which ones are not. And in a sense, if you take what ICT has given us in 2022 mentorship and you just apply the same concept like he said, instead of using the fair value gap, you can take a breaker. You can take an order block, because that, in essence, knowing the draw in liquidity and then looking for the stops to be taken, looking for displacement, looking for an order block in a discount, that will give you a valid order block. And then again, like ICT has said, if you're looking for high probability order blocks, you're going to be looking at order blocks that have a fair value gap right above them. Those ones are the high probability ones. They're the good ones. So that just taking that framework and applying, it doesn't matter what PD array you want to use. You can use any one of them. You can use propulsion blocks, you can use breaker blocks, you can use inversion levels, you can use the consequent encroachment of a wick. It doesn't matter which PD array you want to use, as long as you got the right context above it and you know where price is going to draw to and what it's doing on a daily time frame, where it's moving to, where it's trading to on a daily. Having the higher time frame confluence behind that setup, you can honestly take any one of those entries, as long as you have the correct context and you know how to frame that model. And the only way to do that is you just gotta go and you gotta take that knowledge which ICT applied in the 2022 mentorship, and you can throw any PD array into that and you can apply that idea. For me personally, I did not find the consistency that I was looking for when I started using order blocks, but my eyes like to gravitate towards the fair value gap. The 2022 model for me personally was like the big click. It was like a light bulb. That was it for me. So I personally love fair value gaps, and I like breaker blocks too. I like incorporating them both. For me, it's easy to see, I can trust that. So I just like using that overall. But I still always look in the chart and I look at consequent encroachments of wicks. I look at mean thresholds of order blocks, breaker blocks, and I still apply all of those ideas while I am managing a trade. I still apply all of them. You still use all of them, but you just don't take entries off of all of those PD arrays. Like ICT's mentioned, you get one model that works, and that's the model that you stick with, and you focus on that. You don't change it, you don't add to it, you don't modify it. You just stick to that, and you get good and consistent with one. And from that point on, you take that and then you go, and later on you can start focusing on new entries or new models or the next one that's easy to see, and you go from there. So as an ICT student, I've been studying for about 3 years. This is going to be the 4th year around about November. It's going to be the 4th year. And yeah, it was, for me, it was like it was a tough journey, man. It was a tough journey. I was looking at all this content, back then I was looking at the core con and stuff, and it was just so vague, and there's a whole bunch of stuff, and it's like a whole big picture, right? And you're just like, wow, man, what do I do with all this stuff? And like ICT has said now, that the core content is just the framework. You just take all this stuff, and that's how you go in there and you make your own trading model. And you just don't use everything, man. There's like so much stuff in there. You will never use all of those things in one model. You might have a whole bunch of models that you might use different concepts or different things out of that core content to make that model. But the real mentorship That was all done in the review videos. That's where his real mentorship was. Exactly like how he's going on YouTube right now and he's tape reading with us. It's exactly like that. That was the mentorship. So when he says he's doing mentorship and he's doing those live streams every week, that's exactly what we had. We had those same reviews. We had those same sessions where he sat down and he had us in those uncomfortable moments. And that's where we grew. And that's where I kind of started, I started taking in. And I mean, it took me like at least 2.5 years, at least 3 years for me to take the stuff in and, kind of like starting to have an idea of, what you kind of want to do and what your model might be, and all the back testing and just going in and being like applying that thing over and over and over, looking for it over and over again, and kind of like I said, when we had the 2022 mentorship, that's like kind of like when I was like, oh yeah, that was it. I knew that this is like the base framework for what I want to use in my model. Fair value gap, boom, that's what I want. Now I kind of have a framework of it needs to take stops, you need to have higher time frame confluence, higher time frame bias, and lower time frames are subordinate to that. And then you just when you know where price is going to go from the higher time frame, then you just you work it down, top down analysis, weekly, daily, 4 hour, 1 hour, 15 minute, and from that I know where price is going to go when I look at that. Then I'm like, bam, it's going to go right there. It's obvious. If it's not obvious, then guess what? Then I just sit on my hands, because that's usually when it's not obvious, then it's usually 50-50, and it's like, okay, it can go here and it can go there too. So both sides can be traded. And then that's low probability. Low probability, you know what? Back when I just started, I used to want to go in there, then I'd be like, okay, well, let's see what it's going to do. I wonder what it's going to do. Which side is it going to go to? And you would just push the button to find out where it's going to go. And that would result in a loss, or you would be wrong. So I've gone through that. I've gone through demos. I've had that experience of go push the button and see what happens. I've done that. I've had the pain of that, and it drives you insane. Let me tell you that. When ICT says that you guys don't have to go through that pain, trust them, because I've done that. I've been there, and I've had the cookie, and I tasted it firsthand, baby, firsthand, and it's not fun. And you know what? It's preventable. You guys don't have to go through all that stuff. Just listen to him. Don't rush for money. Just study the stuff, go on a demo, do your back testing, do your forward testing. Once you've done that, start tape reading price, because tape reading is fantastic. Tape reading is that's like the chocolate chip cookie in the jar. It's the best one, baby. Tape reading teaches you so many things, answers so many questions. How do I expect price to trade at this PD array? How should price trade at an order block? How do I know I'm not going to take this order block? Because I look at dollar and I see if dollar's supporting the idea. If it's not, then I know that order block's going to be invalidated as soon as price trades the fair value gap. How do I know I can take an entry right there in that down candle? That's by tape reading and knowing how price reacts once it's hit that level. I'm managing my trade. I'm looking at the order block. I'm looking at the volume imbalance, and I'm looking at the fair value gap. How do I know price is going to trade that order block and continue going higher? Because I look at dollar, You look at the averages, Dow, Nasdaq, and you compare and you look at them. Does dollar support the idea? If it does, then that order block is going to be traded and it's going to act like a brick wall. Price is going to go bam, stop right there. It's not going to move right through. It's going to, you expect that, and it's going to continue going higher. It's all these lessons that he taught us. All these things in the live stream, those boring live streams, where he just talks and he rambles on and he talks. That's where you have your notebook, or you open up your Notion and you take notes. You take notes, you sit back, and you're like a sponge. You absorb, and that's how you learn. You're not going to learn anything by pushing a button in a demo or live funds when you have not gone through, when should I stay out? When should I not go in? Why should I not be taking a trade on this day? Why should I not be trading right now? Because it's all things that you need to learn before you are ready to even consider going into a demo. So, yeah. Just listen to him and just complete the mentorship. And like he says, when you know that you will be ready. But do as he says. It's for your best interest. So anyway, that was just me going off the rails. And I like doing that too. I like talking about things, and you gotta talk about these things, and yeah, it's good to remind people that that's what I gone through. This is what happened, and take the advice from ICT. It's good advice. Anyway, this is gonna be my 4th year trading, and I'm following through with the mentorship this year because it's ICT's last year, and I mean he's on YouTube now, and so I'm following through. I'm sitting down. I'm doing this. Like I've said, I've with the 2022 model, that's where I just started kind of understanding where all this stuff incorporates, and where I kind of started forming the basis of my model, which I do have a model which I'm following and sticking to. And I'm still in my process of growing and working stuff through, so I'm taking it slow. Anyhow, this year, November, like I said, it's going to be the 4th year, which I would be studying ICT. It's going to be my 5th year in trading now, which that's fantastic. I'm psyched. I believe great things are coming, and all the hard work is paying off. I can kind of start to see it's paying off pretty well. So yeah, it's been a journey and a half. I've had times where I felt like, this stuff is difficult. I felt like I wanted to quit, but I kept pushing on and pushing through, and just study this and just go study that, and I just kept on going. But anyways, that's sort of just like a little intro of what I've been doing, and how my journey has been like. So ever since I found ICT, I just kind of stuck to him. That his stuff, if you get it wrong, there's always a reason why you got it wrong. So it just kind of, to me, like the retail stuff, they're like, you got it wrong, then it was just okay, like the market just was not right, or this was not good, or there never really was any reasoning behind why you got it wrong. Whereas now I know, like, oh yeah, me as a trader, I took the fault right there. I made a mistake right there. I was off on, I was trading against the daily bias, or I was doing a 50-50 environment and I shouldn't have been in there in the first place, or the averages was off, or dollar was just not being game today and he was just moving right along in symmetry with ES, and you just knew that you should not have been in there. So when I make a mistake, I can go right in there and I know that I made a mistake because of this. And that's one of the reasons why, you know, I just stuck to ICT. I know that his stuff works. It's, for me, it's I need no proof in that. Whereas he's, you know, he kind of says, like, you know, a whole bunch of people still need persuasion and proof. I don't need that. I know his stuff works. And for those that, you know, if you still doubt and you don't believe, just stick around, man. Just stick around. Keep showing up. Come back every day, and you will see the stuff absolutely is fantastic. It works, and the precision you get, oh man, it's insane. It's like a Mona Lisa painting. I got some examples in my journal where I'm just like, you know, I'm gonna print this bad boy. I want to get this thing painted, baby. I want to hang it on the wall and I want to look at it because it's a piece of art. It's beautiful. I don't know, you know, I guess I just have a passion for this stuff too. So I guess, you know, that adds up. It adds up. So yeah. That's kind of like a background, and hopefully from now on I can provide audio in the videos, which, if everything goes as I planned it, then we shall have audio in the videos from now on, which I believe it's gonna help the channel to grow and get a little bit bigger. And as for plans for the channel, I want to start taking these videos, and along with the videos I kind of want to go and then take the examples that I've shown in the videos, and I kind of want to throw together like a thread of, you know, just the explanation that I gave in the video, and I kind of just want to put that on paper in a sense and just explain it on the paper, you know, like Twitter threads or Telegram threads, and I can just post those things on there, and I can just link the video to the post, and you know, it might be, it's just as an extra learning, you know, an extra little gimmick. So I might kind of start doing that. I kind of have been thinking about it. I think that'll be helpful. And I've been working on some few more things, and I follow like a handful of people on Twitter, which I'm kind of like building up this extra little book of gems on there. And I've been thinking that when I'm ready to make the chat group, the channel, then I'll do like a twice a week gem of the day thing, where I take one of those posts and then I just share that to our community. And of course I got the I got the offers and stuff. I got their Twitter handles and stuff on there. So if you want to go check them out and follow them or whatever, and just or go and give them some credit for it, then I got that on there. So it's not like I'm taking this stuff and I'm saying that it's my work. I'm just taking that and I'm just sharing the work and just spreading it so more people can learn and grow. And I just share the stuff that's useful to me, so hopefully that you guys can learn something, or you might find it useful as well. So I'll be doing that in the group next year when I start that. When I feel ready to do that, then that's going to be incorporated. And I might do a Discord. I might do a Discord group as well. I'm not sure yet. I don't know. I don't think I'm gonna do a chat group on there. I think I'm gonna do the chat group. I think I'm only gonna do that on Telegram. It's just gonna be too much upkeep and too much focus spread between two groups if I want to do Discord and Telegram. So we're gonna just have to decide which one we're gonna do. It's gonna be either one. We're gonna have to decide on that as a community. So yeah, but we're only gonna look at that next year, because this year is just I'm splitting my time between the mentorship and stuff, and so that's taking a bunch of time, and I'm doing my own study work too, and so it's my time is kind of thin. So I'm coming in here when I got some free time, and I'm doing a video, and I'm spreading some knowledge, and giving some of you content, which hopefully you guys can take the stuff and you can say, okay, yeah, well, I actually learned something from this, because most of the stuff that I share are stuff that it's impacted me through my journey. So I kind of just in these videos and stuff, and I just record my journey and stuff that's been impactful to me. So hopefully you guys can find that helpful. So like I've said in the posts, once we get to 500 likes on the YouTube, it's 500 subscribers, yeah, we will look at, I'll do a thing where I sit down on a Sunday or a Monday morning, and it'll be before the New York session. I'll post early in the morning, so it'll be somewhere around London or whatever, or I might do it on a Sunday. I'm not sure yet, but it'll be early in the week, a Monday for sure at latest. I'll do a weekly analysis. I'll drop one on the dollar. We'll look at the I'm looking at the US 500. I don't have the TradingView Premium, so I don't have live data on the E-mini S&P, right? So I'm looking at the US 500, and I'll just kind of like share a daily or a weekly chart on that, and I'll just note my expectations where I expect the draw to be for that week. And then afterwards I'll just do like a updated post on that, of what then did follow through and what then did happen through the week. And that'll just be a reflection of what happened, what we expected, what happened. And at this point in time, I'm not 100% sure yet whether that's going to be in the form of a post with an annotated chart or annotated charts, and then I'll do the reviews of what happened. I'll look to do those on a Sunday. or I will post them on a Monday along with the expectations for the new week. I'll incorporate the euro dollar, so we can have a broader audience of, it's not just going to be futures. So we'll look at dollar, and then we'll incorporate the euro, and we'll look at the US 500. I'm not sure if we're going to look at US 500 or the E-mini S&P. I'll have to see and decide, but I just do my own analysis on the US 500. But incorporating the dollar, that by itself should give anybody trading, doesn't matter what, if you're trading gold, if you're trading the Nasdaq, if you are trading pound dollar, or if you're trading dollar Canadian, doesn't really matter what you're trading. If you've got a baseline on dollar should be bearish, as an example, then you are expecting bullish prices in those markets. So that should be, it should be useful for people that trade forex as well. So that's why I'm tossing in the euro dollar in there as well. And by the way, if you didn't know, the euro dollar that was my pet pair. Yeah, but since the 2022 mentorship, I did go over to futures, and it's been nice. I never thought that I would trade futures at all, but it's been really good. It's been nice. So I mainly used to be a forex trader, but yeah, here we are. We're doing futures now because, like ICT says, that there's just a whole bunch of stuff going on everywhere, and it's crazy. We can see it everywhere, honestly. Over here too, we can just see that stuff is not like it used to be. People are way more tense than they used to be, and there's a whole bunch of stuff happening around the world. It's insane. So the only reason why I shifted my focus to futures is just, if something astronomical or some stuff happens, with currencies, which, like we all know, that the central bank digital currencies are, that's in the process of there's already talks of that stuff, of China, Africa, and India, along with Russia, and then there's another one. I can't remember the name of the last one. These guys are already looking to make their own currency separate from the US dollar. So it's happening, folks. It's happening. They're slowly bringing it in. And I believe Nigeria, or it's one of the neighboring countries. It's either Nigeria or a neighboring one, and they already have a digital currency. So the waters are being tested. It's happening. It's coming. There's nothing you can do about it. Just take it for what it is. So yeah, there's a whole bunch of stuff going on in the US as well. There's, with all these train derailments and water being polluted like everywhere, and the talk of UFOs and the military flying in zones that hot air balloons, that's it, hot air, but not military, it's hot air balloons being where they're not supposed to be, and that's all of that's a distraction. If you've been following along, and you know what's really going on behind the scenes of of uh, of what the U.S. government really did with JFK, of what really happened there, and that's why they released all the things over UFOs and hot air balloons to keep everybody distracted from what's really going on. So yeah, let's not dive into too much tinfoil stuff, as ICT would say. Let's keep the focus on us as a community, what you can expect. So that's what I'm planning, and so it is coming, but there's no set date on it. It's for next year, because when I'm done with the mentorship, I'll have more time on my hands, and I'll be able to focus on, you know, a few more things. So then that's when we can expect those things to come, you know, when I'm ready, and when I feel like my own growth is at a point where I'm happy with it, you know, then when I have some time on my hands and I can, you know, focus on, dedicate more of that time towards some of you guys, then yeah, that's when we'll do the group. So that's coming, and yeah, I'm planning on doing I'm planning on compiling a few models for you guys as well. But the channels, we gotta get at least 1,000 subs. Then, you know, we'll look into that. I did mention a breaker block model, and we'll see when we get there. You know, we'll look into that. We'll incorporate that. I'll get that done. But yeah, the channel needs to get up to 1,000 subs for that one to be released. So we're sticking to the foundations that were set. I might be doing a live stream, or I'm planning on doing one live stream. I don't know, let's say like one in every 2 weeks, perhaps. It's not going to be a set thing. Not going to be a set thing yet, but I do want to go in there and I do want to do a few live streams, and we can just sit there casually, and as a community we can just we can just tape read price, and you can just get some more insight as to, you know, how I read the market live and what I see and what I do expect, and hopefully that just gives you some more insight as, you know, as to me, you know, that you know that, okay, I do know what I'm talking about, and I you know, when I say this or that, I'm not just saying it, but that I actually do have the experience behind that. So we'll get to that. We're gonna do that, and hopefully that's gonna help get the channel out there and, you know, grow the community. That will be fantastic if we can. So that's coming as well, and I'll be looking at that. Once the setup is set up and everything's good and ready to go, then yeah, I'll let you guys know, and then we can get that going. But, you know, it's really going to be a thing of, you know, knowing when ICT is going to be doing something or not. So it's, you know, if we got a live stream of him, then obviously I'm going to be attending that, and then I will not be hosting my own. But yeah, I might then, you know, if he's doing something in the morning, then I might do like a PM session read or whatnot. But we'll get to that. We'll decide along the way, and we'll see where that's gonna go. But it's for sure coming. I'm gonna do that. I think that'll be fun as a community to just sit there, watch price, and talk, and, yeah, we can do all that stuff. I just gotta get it all set up, make sure it works, and we'll get to that. So that's coming as well. So we got a whole bunch of things coming. This community is not gonna sleep. Like I did post, and I said, you know, I give the meat and potatoes, and you're gonna have to take the stuff, and you're gonna have to go in your charts, and you're gonna have to do the study. If you're not gonna do the study, it's not gonna be helpful to you at all. You're gonna have to put in the work and go study the stuff for yourself. And that's exactly what ICT tells us as well. So that's, again, the same thing applies here as well. You gotta go and study the stuff. There's no cake. There's no chocolate cake, folks. You gotta make a chocolate cake if you want chocolate cake. So that's all coming. And I'm excited for the channel. I've not expected it to have grown as fast as it did. But yeah, it's my way of giving back. And I do want to give back as well, and hopefully I can have a whole bunch of people that, you know, who learn from ICT, but, you know, I might just drop that one thing, you know, that just turns on the light bulb for those guys in the sense of, you know, how I look at price and the way I just approach it. You know, it might just be turn on the light bulb for somebody, and that's the goal. That's why we're here. So hopefully, you know, someday we can look back and we can, as a community, we can say that, yeah, it's been helpful and it's been useful. And in the process, I'm also, you know, recording my own journey, which I'm gonna reflect back on someday and be like, wow, yeah, look at where I am. So that's all planned in the plan, folks. So I believe that I've covered about everything that I did want to talk about, or that I wanted to mention. So I'll dive into the charts, and we'll look at that, how to apply that London range and use that in New York session. I think that I'll put that at the end of this discussion. I think I'm going to put that in one video. And the true followers of the channel or the group, I believe that they would appreciate this video. I think it's been in the cards. It's, you know, it's something that, you know, has been in the coming, which should probably have been done sooner, but due to, you know, circumstances which could not have been done sooner. So, but I believe that the true followers will appreciate this, and they will now feel like they know a little bit more about me now as well. So I'm doing that in the end of this one, and I hope that you guys did go back and you studied the knowledge I did give on that model, because if you didn't watch that one, then this one's not going to be beneficial to you, honestly. But so I hope you did go study that logic, because it's going to be the same logic in a sense that I'm going to apply in this one, but it's just going to be at different times of the day. And then I also have a concept, well, not a concept, not one of my own. One of ICTs that I believe that no one in the community has thought about that specific concept in this way. And I believe if yeah, I'm gonna do a tweet on that when I'm gonna do that video, which I'll be looking to do that video in the next coming week. I believe that this is gonna be one of those ones where ICT is gonna be he's gonna get a smile on his face, because I believe that he's been waiting for this one, or for somebody in his community to be like, oh, look at it this way. I think he's gonna get a smile on his face when he notices this one. So I'm super excited for that, and hopefully once again you guys can find some extra bit of knowledge in that. And by the way, it's gonna be a concept on the fib. It's gonna be on the OTE, and that's part of the reason why I say I believe ICT is gonna get a smile on his face if he does notice the post, because I think that it would have been something that back in the day, some of his older students, if they did mention that to him, he would have been like, oh, you guys noticed it. So that's coming. And I did do a video on the OTE, so this is kind of going to be like a follow-up on that. So I'm looking forward to posting that one as well. And yeah, we'll see where it goes from there. So I do keep in par with some of the requests that you guys have, and I believe I've done 1 or 2 requests. I'm not sure of the exact number on that. And there was another request that I had where a guy wanted to see different, let me just, oh no, I won't find it right now, but the guy wanted to see different, he wanted to see an entry being used in different market conditions, like one type of an entry, but the different ways in different market conditions how you would apply this entry. So I'll get to that. I'll get to it. I haven't forgotten. It's coming. I'll do it. So if you guys have any requests on things that you might want to see, or you've got questions on them, feel more than free to drop them in the comments, and I will see if I can do a video on it and see if I can answer your question. You guys are also more than welcome to go on the Twitter, which I've given that. It's the algo. Let me just open it up, find it. It's at _algo_trader. You guys are more than welcome to just go on there and just tag me in a tweet if you've got any questions as well. I'll probably answer you on that one as well. So that's all cool, or you guys could just comment on the videos to it. It's all good. So yeah, we're gonna get to that and do those things. So let's go ahead and let's continue and get in the charts, and let me show you guys this model. or this concept. Hopefully you've enjoyed the chat and the hangout, and hopefully we will do more of these. So let's dive into the video.
So finally looking at the chart over here, I did have a bit of a delay because it's been a struggle to get this machine going and getting it set up, and you know it's kind of slow and hard, and it's giving me a hard time, man. So I don't know if we're going to be using this, if I'm going to be using this specific machine in the order that I wanted to use it, but I don't know. I guess I'll think about it. Yeah, but I definitely do want to, incorporate the audio in the video and keep things, as best quality that I can provide. So anyway, let's dive in. We're looking at Eurodollar. We are looking at a crude depiction of the London session from 2 to 5 a.m. So that's just a hypothetical London kill zone, which I've outlined. Now, in this example, we will look at denoting the time of the session, and then we will note the high and low of this specific range, and then we will also note the 50%. So I'm just going to pull the fib across the range, so that way we can have a general idea of what the range is. I'm going to go ahead and pull the fib up now at a low. Let's see, let this thing go over here. So there's the fib. Okay, perfect. There we go. So I'm just going to go ahead and put lines on these. What ray? Let's do the ray one. So take note that I'm using candle specifically highs and lows. I'm not incorporating the wicks. It's, it'll differ from situation to situation, but for the most part I will probably be looking at noting the candle bodies specifically. They are more telling to what price is gonna do. In other words, they tell me what price is really doing. The wicks are more, manipulation and stop hunts, and so I don't like to incorporate them. So most of the time I just incorporate the candle bodies so you can help my range. So let's go ahead and get rid of the fib because that's just in my way. And let's move over
expect nothing less,
New York
check is on
session.
chest, what's happening next, yeah. He got the venom, a tangible weapon, no coming in second, this life is a lesson. He got a new engine from pain, it's a blessing, new focus, no guessing, just brought an obsession, all in his possession, you got the retention, not leave an impression, and take your redemption, just kill no discretion, your mind is a weapon, 11-11, it's time for progression,
as early as 7 up to 11 o'clock, which, it's, again, I'm just giving you the general strike zone of the range, which has the highest probability of usually providing sale.
So he's been looking for somebody who could
So
save
looking at this
him
over here,
instead
we
of
can
searching
clearly
inside
see
for
that
what they
we
gave
have the low
him.
right
A
here.
strong will, strong
We
mind
have
causes
50% right
mayhem.
there.
We could change
And
the
then we
world,
have the
change
high
times,
of the range
rearrange
right
them.
there.
Staying on pace, running the race. Life is a chase. I don't want to
So,
place. I want to be first. Work till it hurts. Dehydrated thirst till I'm in a hearse.
In this specific example, it's going to be, we're going to take this the same way if you were, for instance, referencing back to the previous video which I did on this concept, and we used the Asian range high as a target. So in this example, we would use the London highs as targets. Now along the way, if I was looking at this chart, again I was sitting down and I would be looking at these highs right here because they are equal highs. I would be looking at these. That would be my first target. Then I would be looking at these highs over here. Come on. Trend line. I'm looking at this one over here.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, a disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display, with the enemy, think that it was meant to be, living in a time where disease is on every screen, I won't let them fester me, I know most are festering, negativity is a plague for the mentally weak, no mercy, all I got is working, never stop searching, never quit
also look at this one above.
Toxic and psychotic with this logic, you can't stop it, it's been chronic since I was a boy, so neurotic and chaotic.
I would have choice. And as I was trading them, I would take partials, right? You take your first partial down there, partial here, you take a partial range, you take a partial 50% of the range, at the high of the range drop. So let me just hold for once with the fifth, and you can see it. Again, so if we are a discounter and look to take targets at the premium, which obviously they can see how price just it really fire into this the gap over here and the high until later on come back to that, use it at the London range above this model. Let's just go in the we took that New York session and we have mainly for the classic 2022 model with the dumb entry being used, but this is kind of in a sense going to add to that price, and it takes buy or sell side, it takes a stop. You're obviously not going to wait for it to sell. You could, but I do in this case it did. Like say short-term high. Short-term highs and market shifts. So then we look for what? We look for fair value gap, right? Here we go. Immediately runs away. Trades up. First target, let's go ahead and we have a long gap. Top. And let's go ahead and move this out of the way. In this setup, here we go. So, this low over here pips, which is 10 pips. That's not bad over here. Which first target that will be in a premium, which is not at all, or the London, and then fair value gap, which run that it just hit all of the quite a big run, 3 pips right there. They get 90% of range right there, and then highs take great. So there need and make something for look at some more things that I set this price action up the market structure. So I sat down over here right there, those up candles would pull, come on. That's the first thing. The second thing I would see, because we are it's gone, we have a buy model operating in a discount still in the model. That's I would also note buy up there as well. One of the last things that I would see, look at them, down candles, extend them out, block, price, extend that out. There's no in them, you would see how. So I backed it. So it just did not close above the big candles. So I don't want to see it meander through a pretty good chance. I wouldn't take that. I would wait for price to up here. It's really starting. I would trade over here. Yeah, let's go ahead and this entry over here. position. Bam, right at the top of this. And I would have below that lower, below those order stop loss, right below that should be safe. My target would be here above 50%. That's about 6.5 pips, which is not bad. Hold on, let me understand this thing. It's more than 6.5 pips. It's about 8 pips. It's not bad. I'll take that for a first. You know, take something off, leave a runner, and then my second target would be low of. Let's target the favorite gap. Nice and easy pips right there. That I'm gonna go do something. Prices in a click and like sitting there, and takes risk off the have risk to we're gonna order. Entry at that level here. Partial above this high over here, which is 4 pips, which is not bad. You know, the low end is favorite are good. So, if I said looking 5 pips, then that's what I'm on to the next one. Alright, we got the second setup right over here. So, in this one, I am dropping you guys some sauce. So, looking at this piece of price, I'm giving you something extra for sitting through the whole video. So, what I have annotated here is 6 to 7 is a clear depiction of the lunch hour, right? So what I'm gonna do over here is I'm gonna take the range of the lunch hour and we are gonna annotate the range the same way we annotated the London range. Again, I'm using candle bodies, high and low of this range. Put a fib on there and get to 50. The 50 is a extra confluence. Let's annotate this. 50%. Give me ready. Yeah, let's get rid of it. And then New York session goes up to 10. Okay. This is a specific example that I'm showing you, which I'm now applying on the lunch hour. This one takes a bit of thinking outside the box, because this is not one that ICT specifically mentions in his videos. You gotta think outside the box, and that comes with, you know, comes with a few years of experience. You kind of start taking some of the things and you just play around with them and you start seeing some things. So this specific one, taking time and then price aligning and then looking at specific ranges, and when all those things come together, they give you pretty good confluences and you'll be able to find trade ideas using them. So I'm just throwing that out there, you know, for the people, for the ones that like to take notes. I'm just tossing that out there and just giving you some sauce for your meat and potatoes. Now, you can take the same concept and you can go ahead and apply this one to a London session on a day where you have a range in the London session, a range bound London session basically, and then you can use this exact same concept where price is going to give you that range, it's going to trade away from the range, okay, trade back into the range, and then trade away from the range. If you just look down here, you can see price traded through the range, traded back to it, and then away from it. Okay, that same concept can be used, can be applied to the London session as well as the Asian session. Okay, it can be applied to any one of those times. So if I look at this piece of price action right here, I can clearly see that this is sideways. And if I look at the London session, we can see we rallied higher off of this low right over there. In essence, zoom out a little, move it over, what do you see in price right over here? What do you see if you look at this whole piece of price? You see price is up, chopped, we have a high right there, we kind of stop it now, redistributes. This is a class maker, so you know, those are free ones on YouTube. That's what I see just looking. That's when I trade to this chart, then I was right. Be all over this show. We're here. Then we got that one right there. So that one, the liquidity one. So I'm gonna take this one off. There we go. This one off. Okay. Let's bring this price up. Here we have all these, we have liquidity, New York swing, Judas swing, and it also trades up into Sen lunch range. So that's another confluence we have over here. Again, I can apply the 20. So let's construct. Right, perfect. And then you have gaps in here, which case over here, which chopped around a little. So that would have been, you didn't take that one, and you would fine if you pass on that trade. So left over here, we also have this high, and we have the higher high right there, right? In time, there you go, right? So that's perfect. Look at the candle, stay right there. It's right at the target. So that would be a perfect entry point for me. So then let's go ahead and frame this setup. Short position, entry right at the low. Stop loss. If I took this position, I would have a stop above this fair value gap right there. Just to incorporate these fair value. If not, you can also stop loss above the high of the breaker block. I would have that right there, and you want it in there as well. After that, target would be right this low, 9 pips. That would be a partial. I would look to take some here, 20 pip for me. You know that call. I would take session over there, and you can see we times of the day. So that's why I would have been, if I don't see any I would have taken, that would have been it for me. Fortunately not trade up to those fair value gaps over here like you maybe would have expected price to do if you did not look at the. And that's just a day that you will not find the setup. You will just sit on the sideline, and that's going to be it for you on that specific day, and there's nothing wrong with that at all. Trading is more about, you know, not taking everything that jumps out at you. It's doing less is actually doing more. So for your homework, or for those that will backtest this stuff, go and find that London kill zone that has a range, or that's range bound, and mark out the range and look for price to come trade out of the range, trade away from the range. Your home, and that's going to conclude the video. Hopefully you found this insightful. These ranges, it could be one of your models all by itself, or it could just be, you know, all that you ever trade, and that's perfectly fine. That's more than enough. You don't need more. So it's worth a study. It's something that I look at in the charts, and it grows your understanding in price action as well. So hopefully you've found this insightful and helpful, and until the next one, I hope you stay safe.